Okay, so real quick, I wanted to show you some important things to know, specifically with day trading and why most day traders stick to the rules of trading 4 hourly and daily with the Ichimoku cloud and never trade within the cloud or when you're above a red cloud, but especially trade and only trade when you're above a green cloud for a buy. For instance, this is now trading in the cloud. Okay, guys, real quick, I want to mention when we built our custom inputs for the buy sell custom MACD, the last squeeze, and the Ichimoku, the golden rule for all traders and investors when using the Ichimoku says that you should never trade within the cloud. So what I look for is, first is the daily and the 4 hourly anywhere in the cloud. And we can see that the daily is in the cloud. And it also looks like it just shifted down to the bearish side. So the 4 hourly, we're underneath the cloud. So anything underneath the cloud trading a 4 hourly, I typically won't get in. If you want to play risky, you could have gotten in right here. But as you can see, it shows a sell signal, and then you went from 37 up to 39. But there's too much risk with that for the fact that you're underneath the cloud. You can short a couple times here, close out here. That's a downward movement from 41 to 39. But I never short or take short positions. I always go long. But all I'm saying is, guys, when you're using this Ichimoku with the buy-sell signal MACD and also the last squeeze, all of these exist. I've just adjusted the inputs and at times what worked best for me and what gives me a better trading profitability. So real quick, I want to show you this fake out, and I think it's in the 15-minute, and as you can see, there's a couple of them here. And overall, we're still underneath the cloud on the daily and 4 hourly. If you bought in here, this was way too late and it started going back down. This is within the 15-minute. The 15-minute, when you're in a good daily and a 4 hourly, tells you at better price points to get in, much lower overall. That's all. I never base my entry long term within a 15-minute because you've seen it's just too many fake outs. Whoever's using this little short time, it looks like they are on a certain trend and they're just trading in and out, in and out. But like I just said, guys, I always take a look at the daily. If it all pans out, then I may get in. But as you can see, the Chiku span or the lagging has now broke the trend. The sell signal's here. So we would stay out of XLM for a while until it looks like something back here where it broke the cloud, the Chiku span or the lagging span is away and out above our trend. We got a good buy signal here, and our squeeze is indicating green as well. Now remember, I did provide a last squeeze oscillator too, which is basically a MACD, just a little offset to give you overall and short term. As you can see, short term was green. This overall is still bearish. So the two, when they coincide with one another, that's the double confirmation that we're always looking for. A buy here, both of these are green, good. Should we have gotten out? It is darker and yellow too, and we're off to the bearish side, and there came the bearish signal. So just remember, guys, when you're using this, look out. We're wanting the longer trades all the way from 12 to 53 cents, and then now we're seeing the long-term bearish for now. If you're trying to trade 15-minute and 30-minute, just keep track of where you're at in the overall trend. If the overall trend is down, then the 15-minute and the shorter terms are going to be much harder to predict, and they're going to play opposites of each other. So we're in a down market daily, so you could just get in and then happen to be in that trade for the bad side for a little bit longer than you're intending. So just keep that in mind, guys. That's the golden rule that I look for, and I hope this video helped.